Also Pankaj Pandey, Head Research at ICICI Direct, joining us this morning. Pankaj, how significant with regard to at least the acquisitions that have been made? And in your opinion, companies which will benefit or disproportionately benefit in terms of top line versus what the top line stands at today, give us a sense, life-changing for which companies, if any?
Yeah, hi, good morning. Thanks for having me. I think overall, last 4 years, we have seen the Defense Acquisition Council giving approvals worth about 12 lakh crores. Historically, we have seen that for it to sort of translate into orders, typically the timeline has been 2 to 3 years. But our sense is that now these orders are expected to be placed within the next 6 months, and which is why it is positive for companies like, say, Bharat Electronics, BDL, and Solar Industries. So these are the key companies which are expected to sort of benefit. So BL is expected to benefit across multiple programs because of their low level lightweight radars. Similarly, BDL will benefit from Astra Mark II air-to-air missiles, and HL is the lead integrator for simulators. So that is also sort of going to benefit. And I think on top of it, if I have to add for Spice 1000 kind of a missiles, Bharat Forge would be a beneficiary because this company is involved with Israel Rafael Advanced System. So all in all, our sense is that Bharat Electronics, Solar Industries, and HL are expected to be a big beneficiaries. And I think this is one segment where when you sort of look at next 4 5 years, the comfort on mid to high teen growth is quite high. While yes, stocks are not performing, but our sense is that defense is something which will continue to sort of garner a good amount of news flows, because at this point in time, we are spending about 2.5% of GDP on the overall defense and about 0.8 odd percent on the capital acquisition, and which is where I think this news flow is expected to benefit the companies which I mentioned.
Okay. All right, Pankaj. Kunal, view on defense. Yesterday was a soft day for defense. Despite this announcement, fag end of the trading session. Could it be an opportunity for a trade today?
It could be an opportunity, and especially I think for the likes of BEL, Power Dynamics. I think these are good names where there could be a decent price action pickup which could happen. Most of the other names like GRSC, Mass Condoc, etc., they are slightly on the high beta edge over here because of the fact that these stocks have gone through a very sharp correction. There could be a chance that these stocks may bounce back also very sharply, but then that's the element of the high beta. If you want to take that additional risk, only then it makes sense to look at these stocks. But yeah, I think from a stable perspective, I would look at BEL as well as Bharat Dynamics as better options.
Kunal, also some of the other stocks, we spoke briefly about banks, but within banks, you have the NBFCs which have done pretty well this time. Going into 2026, do you think that many of them will now stand out in terms of because if there is some further rate cuts coming in, there will be a trigger for these companies, especially NBFCs and then gold loan NBFCs also.
See, I think interesting question over here, Sajid, because I sense that over the last 2 months, the pace of rally for the NBFCs have slowed down. So what was there for the major part of 2025 for the first 6 7 months, that pace which was there, and I'm talking of the likes of L&T Finance, AP Capital, etc. So these stocks have done phenomenally well. Surprisingly, in the last 1 or 2 months, the pace has slowed down. These stocks have gone to a consolidation. Yes, Shriram Finance has been an outlier because of the news flow attaching to the stock price. But then when you look at the other names, most of these stocks have gone through sideways in the last couple of months. So this indicates that start of 2026, I would actually expect that these stocks may go into a time-wise correction rather than a major price correction. And it's a good sign that if these stocks maybe digest the gains, the kind of gains they've seen in 2025, if they digest the gains for the next 2 or 3 months also, that will be considered as a very good sign. Now look at the kind of moves. L&T Finance is up 130, 135% on a YTD basis so far. So after this kind of a move from 150 to almost 300 levels where the stock is trading right now, even if it tries to come back to 275, 280 kind of a strong support, then I think that could be an opportunity where traders could try and lap in. So I would actually believe that there could be a point where over the next 1 or 3 months, if these NBFC names, NBFC stroke HFC names, if these stocks correct by say broadly 10%, that will be a very good opportunity to go for a buy, especially if the time frame for someone is more on the medium to long term.
In fact, BEL has received orders also worth about 569 odd crore rupees. So that stock may be in focus this morning, as has RVNL. But let me take it across to Ishika and find out what are the other newsmakers this morning. Ishika?
Definitely. So here are some of the stocks in spotlight today. We have Bharat Electronics. In terms of order wins, it has secured an additional defense order worth 569 crores. Now, yes, it is not as significant in context of its order book, but this does signify a sustained order wins. We also have RVNL with an order win. It has received a 201 crore order again from East Coast Railway, and it has emerged as the lowest bidder for this project. And in terms of expansion, we have Cupid in news. Now, the board has approved the setting up of a new FMCG manufacturing facility in KSA, that is in Saudi Arabia, and this will support expansion and market penetration in the GCC region. Furthermore, we also have Lloyds Engineering Works in an important announcement. The company has announced a strategic merger, merging Lloyds Infra, Metal Fab, as well as Techno Industries to create a unified engineering as well as infrastructure behemoth. Now, this board-approved merger of these three strategic entities will combine into Lloyds Engineering Works, and it will become a design to execution solutions provider with 6,150 crores order book as of H1 FY26. Now, next up, we have Timex in news. A little on a negative note, the promoter Timex Group Luxury Watches BV of Netherlands has exercised its oversubscription option in its offer for sale, increasing the stake sale to 8.93% versus the originally planned stake sale of 4.47%. That is, they have decided to sell more shares than they originally planned, right? Now, this will be material as it can impact liquidity, near-term price action, as well as promoter holding. Back to you.
Okay, thank you so much for that, Ishika. So those are just some of the other movers. You know, the other one was Intero Health, where ICICI Pru has picked up a stake. Small Cap World Fund Inc. has sold a stake as well. So ICICI Pru, surprisingly, of course, S. Narayan picking up stake generally makes news, and therefore that one will also be in focus. Intero on charts, do you have a view?
I don't track it.
Okay, perfect. Okay, Pankaj, do you track Intero at all?
No, we don't have a coverage on that company.
Okay.
Well, Timex is the other one which is going to be in focus. The Timex Group Luxury Watches has exercised oversubscription option in respect of its OFS. The size now is at a solid 8.93% for Timex. Yesterday, of course, you had that news flow and you saw the stock fall 6.5%. But Kunal, I'm not sure if you track Timex at all. Do you?
Yeah, I don't track it because it's a BSE listed name purely,
Sure.
and the stock doesn't have too much of liquidity.
Okay, that's Timex, and look out for what that stock as well is going to be doing in trade. But other than that, of course, you know, the move has really been all about railway, defense and metals names off late. Some of the consumption names as well have been perking up. You've seen the likes of a Titan, a Nestle as well make those sporadic moves. Pankaj, how are you reading into Titan's foray into now lab-grown diamonds, which was considered to be the big threat for them earlier?
So I think, Aisha, this is the much needed step because I think somewhere down the line, affordability was a question mark when you have seen gold prices running up. I think Titan within the consumption space looks very attractive to us because recently they have revised their guidance upwards for the watches division. The jewelry division is expected to sort of do on a steady basis. And I think this is one of the few large cap names where you could expect a mid to high teen kind of a growth over the next 3-4 years or probably even longer. So I think that company looks attractive to us. Besides that, I think we also like something like Phoenix Mills. It's a largest mall operator, and it's a sort of a good proxy consumption play for most of the categories. And I think we are expecting a double-digit kind of a consumption growth. So that is another company which we like within the consumption as a overall space.
Pankaj, you know, we saw the IIP numbers coming in yesterday, and a good set of numbers with respect to growth for consumer non-durable businesses. What is your view on them?
Consumer durables or consumer non-durables? I'm slightly confused.
Consumer non-durable.
So I think one is when we sort of look at overall issue with post GST is largely sort of addressed. And our sense is that now this particular quarter, we should see both margin expansion as well as volume growth picking up. But this is one space which we really do not sort of chase much. I think structurally, if your income levels are going to go up, discretionary consumption is what is going to pick up. It could be autos, it could be consumer durables, or it could be real estate. So I think that is where most of the action would sort of lie.
Interesting. Pankaj, if I were to push you with regard to the banking space and within the financials rather, more broader, we've got a couple of positive notes coming through. So trying to get your sense, repo rate cut, you had in particular a Shriram Finance which has a rating upgrade now from CARE. And let me first talk about Shriram Finance in particular. You like the stock, the story at the current juncture for the next maybe 2-3 years, or would you be cautious just given the run-up?
So on Shriram Finance, we have the highest target price of 1,200. Largely, see, I think our sense is that with this rating upgrade, also we would expect the cost of funds to sort of come down, and that would also mean that the margin accretion will also happen, and in parallel, it is going to also lead to higher return ratios. So while yes, the stock has done well, but we like this story for the next 2 or 3 years because I think CV as a cycle is also sort of shaping up very well. Especially the OEM side, last 2 months we have seen pretty good growth. In addition to that, I think if I have to sort of name on the NBFC side, I think Bajaj Finance is looking attractive to us. Our sense is that this company can deliver 18 to 20% kind of a year growth and about 22 to 24% kind of a bottom line growth. Stock hasn't done much, not expecting that the stock will do much in the near term, given the fact that you will have elevated levels of NPAs or asset quality concerns, especially in their two-wheeler book. But in general, our sense is that it is going to be a beneficiary of GST cut, and which is why we feel that this stock should do well and should be bought at current levels. We have a target price of 1180 for the stock.
Right. Okay. Pankaj, where do you stand on the entire gold, silver, copper, ancillary trades or related trades? Your Hindustan Zinc, Hindustan Copper, a Muthoot, a Manappuram?
I think we have seen a very sharp rally across gold and silver. This is not the time to sort of chase some of these precious metals. I'm very cautious on this. In fact, from our portfolio, we've been sort of exiting silver ETFs as well. But one of the best ways to sort of play through is Vedanta, because I think while SZL does not make sense to sort of buy at current levels, given the rich valuations and also the fact that zinc volume growth is not going to be very high. So from that perspective, Vedanta is something which can be looked at. But in general, non-ferrous is something I would sort of tend to avoid, given the fact that even your copper and even your aluminum prices are at a 3-year high. So our sense is that ferrous names like, say, Tata Steel are a better bet. We've recently seen domestic prices improving by 1,500 rupees a ton. And overall, any kind of a final decision on safeguard duty can be sort of added positive for this. So ferrous names relatively look a lot more attractive. It is time to avoid non-ferrous as a pack.
What about Hindustan Copper in particular, Pankaj? I wonder if you have a view on that one. The kind of run-up that we've seen on a stock, it's been non-stop.
So again, we don't cover the stock, but it's a very longish story. Any meaningful growth will happen in 2029 and 30 and beyond. So I think, like I said, it's a very longish story. Wouldn't chase at current levels.
Yeah, 82 times trailing 12 months. Okay, so that's of course on Hindustan Copper. Do you have a view with regard to Copper and charts?
Yeah, I think it's an excellent chart, Harsh, because the stock, I remember, I think in 2016-17 was almost at 100 rupees. From there, the stock managed to just about go into a decent rally mode. Right now, the stock is trying to confirm breakouts on the longest term time frame. It's still way off from the lifetime highs I think around 650 levels, but that was seen almost 20 years back for 15 years back for Hindustan Copper in say 2009-10 odd levels. So I think in that context, yes, the stock price still looks very attractive. It's just that in the recent price momentum, the with the asset classes moving up higher, we've seen base commodities moving up significantly higher. There could probably be a point where the stock may look a little bit frothy on the higher side. But then these are natural waves where these stocks go into extremes. Once the extremes are cooled off, the price trend picks up yet again. So I think in that context, I would be bullish on Hindustan Copper on the long term time frame. Short term wise, yes, maybe the stock could just about moderate at levels of 475, 450 levels thereabout. But in case if the stock drops down to say 450 levels or slightly below those points, that could be a good zone where traders could try and accumulate further.
Okay, that's that on Hindustan Copper for sure. There's Shriram Finance, which is going to be in focus. They've received their first credit rating upgrade as well, post the MUFG deal from CARE. Hindalco AV Minerals to buy about 50 lakh Novelis shares for about $750 million. BEL, which has bagged that additional order worth about 569 crore rupees since the last disclosure that they made on December 12th. There's Lupin also. They've signed that exclusive licensing agreement with one of the companies for a GLP-1 receptor. So look out for what that stock as well does. And then Bandhan Bank too, which is looking to sell its NPAs and write-off portfolios worth about 6,800 odd crore rupees to ARCs for 902 crores. So that's going to be a very important stock to look out for as well. And then, of course, Senco Gold also, they've extended one of their marketing tie-ups. Look out for what metal stocks in general do, because there's been a sharp fall from the record highs that one has seen for both silver, gold and copper. So today may not be that right day in case you're looking for an uptick really on those stocks. And then, of course, Interglobe Aviation, it seems that there has been that hike in pilot allowances across duty types. So that rumor, of course, we're yet to confirm it for sure, and we're yet to get any official confirmation from Interglobe. But Pankaj, quite a bit of turmoil Interglobe has gone through, and now with these small airlines finally, hitting the ground running, what is the prospect for Interglobe? Still continues to be the dominant one, though, in Indian skies.
So for tour and travel industry, I think we will prefer more of hotel companies, the likes of say Indian Hotels, the other like say Chalet, or because I think our sense is that for these companies, one we have not seen, at least the management commentary suggests that they are not seeing any kind of a major demand decline because of the overall incidents. So that way, I think that segment looks a lot more better to us. Second half usually is a lot more better compared to the H1. So I think Interglobe, my sense is that probably will take a decent amount of time to sort of bounce back. Whereas I think when you look at hotel stocks, they are already sort of down 25-30% and probably at current levels, they make a relatively better risk-reward trade.
Kunal, all the damage behind us for Interglobe Aviation?
Yeah, definitely. And I think the fact that the prices are settling at this 5,000 range indicates that investors are now trying to take this as an opportunity. These are the kind of stocks which generally go into very rare phases of price correction, and it is always backed by certain kind of news flow. Now, look at this way, from 6,000 of I think 5,900, when the news flow happened for Interglobe Aviation, the stock corrected towards I think 4,650 was the low for the stock price. So that's a decent 20-22% correction for Interglobe Aviation, and I think in that context the stock still looks fairly attractive. So I would not look at it from the perspective that the stock has bounced off from 4,600 odd levels towards 5,000 mark, but it's still almost 15% off from the recent highs. I think that could be a zone of opportunity for Interglobe Aviation.
I was just looking at the passenger traffic numbers which came for November. They were decent in November, but the first half of December is where the disruption happened for Indigo actually. So that's going to be something there. And on a month-on-month basis, ETF prices have gone up by 5%. So that's a cost increase, which is or the margin squeeze, which is going to come from many of the airlines. But Air India has been able to increase its passenger load factor by the most, and the first 15 days has been a disruption for Indigo in that sense. So overall, if you look at the Q3 numbers, if it's going to come in, there will be some surprises for Indigo with respect to fall in revenues and impact which is coming in, and I think other airlines, SpiceJet may be a beneficiary in that sense.
Okay, so that's with regard to an Interglobe Aviation. The other one also in focus will be an Ajanta Pharma. It's done, it's obviously the tie-up with regard to semaglutide is a positive. But how are you looking at Ajanta Pharma overall, Pankaj? Is there some better visibility with regard to numbers? Are you revising your estimates or the like, and by how much?
So I think, see, in the pharma space, what we are clearly liking is the domestic space. So with that in perspective, companies like Sun Pharma, Ajanta Pharma, Ipcolab are our preferred picks. Largely because our sense is that this time around, government is not going to budge on the schedule M, so that really opens an opportunity of nearly 75,000 odd crores of the overall industry size of 2.5 lakh crores. So our sense is that domestic growth is probably going to be better compared to the 8 to 9% kind of a growth what we have seen. And with companies like, say, Sun Pharma announcing a capex of 3,000 odd crores, so this is happening after a decade or even longer. So our sense is that domestic growth is going to be a lot more better. So companies which have got a decent amount of portfolio on the domestic side should benefit. So which is why Sun Pharma, Ajanta, and Ipca, I think, should do well from current levels. So we have a buy on all three of them.
Interesting. Okay, that's the take coming in on pharma. But let's switch gears, and sources are suggesting that ABS norms may be actually delayed as OEMs are citing cost impact and effectiveness concerns in entry models. Shrishti is here from our research desk to highlight what exactly is she picking up. Shrishti?
Well, yes, 1st January 2026 was the deadline for the two-wheelers below 125cc segment to comply with the ABS, that is anti-lock braking system deadline. And as per our sources, we understand that this deadline is likely to be missed, though the government notification is still awaited. But along with that, what we understand is that OEMs have raised concerns that if this norm is applicable, this will definitely lead to the cost pressures on the entry-level two-wheeler segment, because that is expected to impact almost 84% of the domestic two-wheeler market. And in that as well, what we understand is that some of these counters and companies like Hero MotoCorp, Bajaj Auto, TVS Motors, their portfolio is likely to be exposed in the range of 35 to 94%. And if this norm gets applicable, then the cost of these entry-level two-wheelers, or rather the two-wheelers below 125cc segment, the cost might increase in the range of 3 to 5%. So that's where the hindrance is. And the other factor is the industry readiness as well, because as of now, with respect to the total units that ABS can be produced in India, that is actually 1/3 of the kind of capacity that is required to cater to such a large volume. Because in the listed players as well, it is only Endurance Tech, but along with that, in the unlisted space, we have companies like Bosch and some of the other private players that cater to this specifics of anti-lock braking system. So these are some of the hindrances, and maybe because of that, this deadline is likely to be pushed beyond 1st of January, is what we understand from our sources. Back to you.
Okay, thank you so much for that, Srishti. And of course, we'll have some of those counters on our tracking list as well. But Rajesh Bhosle joining us, technical analyst at Angel One. Rajesh, how are you viewing markets? We're stuck in a range. Any breakouts anytime soon that you're penciling in?
Good morning, and thank you
morning.
for having me on your show. So if we see the entire December month, market has been trading in a range. If we see on the lower side, 25,700 to 25,800, that has been acting as a support. And on the higher side, 26,100 to 26,200, that has been acting as a resistance. With just 2 sessions left for the year, we don't expect a breakout, and we expect consolidation to continue. If we see for the expiry point of view, 25,800 to 25,750 seems to be a very strong support. And we'll have a stock specific approach where we are seeing individual stocks are doing very well.
Okay, that's the take coming in right now on what the charts are reading, and it seems like once again we're headed in for a very, very quiet start. The implied open still lower by about 33 odd points is where we're currently at. Just looking at the market texture, and while, not a whole lot is really happening, but yes, metals and IT, they've been the stronger of the lot of late in the markets. Pankaj, what is your sense on whether or not metals and IT as a trade will continue to outperform vis-a-vis other sectors, even as we step into the new year?
So I think between the two, metal has already sort of done very well, Aisha, this year. So that is a segment I will not be chasing, because our sense is that sector rotation is expected to pan out, because your primary market is still going to remain fairly active and fairly buoyant. So IT looks quite interesting to us. One, I think this is one of the few sectors which has seen a double-digit decline this year. And it's a good contra play compared to what you see for the AI-related trade, which is sort of happening. And we have seen Indian IT companies starting to sort of take baby steps towards AI as an opportunity for which they want to sort of chase. So Indian IT companies relatively look attractive to us. So it could be tier one names like, say, TCS, or even we like some of the R&D companies like, say, KPIT, because our sense is that overall, this company can deliver mid to high teen kind of a growth and similar bottom line growth. So IT looks as a good contra play. Somewhere down the line, we would want to believe that this AI-related theme will sort of tire it out. So from that perspective, I think IT is a good contra play at current levels.
And is this your top sector bet right now, Pankaj, IT? Or any other sectors that you think that will do well, at least to start off the next year?
So 4 sectors is what we are concentrating on. One is BFSI, and the other one is IT as a contra play. We also like the real estate, because 2024, this was the best performing sector, delivered somewhere about 40% last year. It was one of the worst performers. I know there are no hopes which people are seeing for real estate, but our sense is that this is one sector which can sort of benefit from sector rotation. And last one would be the capital expenditure as a theme. I think budget is around the corner. I think the entire theme has taken a backseat because of the consumption-related segments sort of doing well. So I think capex as a theme can also make a comeback. So we like even that in that cement companies also, despite the fact that we haven't seen much of a price performance.
Okay, understood. Pankaj, great to have you on the show today. Thank you so much for your time.